Hey everyone, welcome back to Corporate Decoder. INVO Fertility Inc. ticker IVF just filed an amendment to their annual report, and there are some important disclosures about their financials and leadership. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is an amendment, so it is correcting or adding to previous information, and we are seeing some fascinating details about their performance and some interesting leadership commentary. Okay, so this is actually an amendment to their 10K filing, which is their annual report. Think of it like a big yearly checkup for a company. They originally filed their report for the year ending the 31st of December 2025, and now they are filing an amendment. Why an amendment, you ask? Well, they explain it here. They did not file their definitive proxy statement on time, which is usually required to go along with the annual report. So they are filing this to add the required information for Part the Third, which often includes executive and director information, and we will definitely be digging into that. Let's start by looking at the people in charge. This section lists out the directors and executive officers. We see Stephen Shum as the Chief Executive Officer, Terah Krigsvold as the Chief Financial Officer, and Andrea Goren as the Chief Business Officer. We also see some directors listed like Matthew Zott, Trent Davis, Barbara Ryan, and Rebecca Messina. It is interesting to see their ages and their positions, giving us a snapshot of the leadership team. It is crucial to understand who is running the company, especially when we look at financial performance. Stephen Shum, the CEO, has a pretty interesting background. Before leading INVO Fertility, he was the CEO and CFO of Eastside Distilling, Inc., and held various roles at Xeris Corp., a renewable energy company. He also has experience in product development and investment research. This kind of diverse experience can be a huge asset in a role like CEO, bringing different perspectives to the business. Terah Krigsvold, the CFO, has been with the company since December 2020, initially as controller. Before joining INVO Fertility, she also served as controller at Eastside Distilling, Inc. Her background in accounting is essential for managing the company's finances and ensuring everything is reported accurately. Andrea Goren, the Chief Business Officer, has a dynamic history with the company. He previously served as CFO from June 2021 up until the 30th of December 2025. And even before that was an advisor to the CEO. His experience at Phoenix Group, a private equity firm, and his roles as CFO for eSign Solutions Inc. and on the board of Explore Technologies Corp. Show a strong financial and business development background. It is important to note his transition from CFO to Chief Business Officer in late 2025. Matthew Zott, a director, has extensive financial experience. He has served as CFO and co-founder of Cadrenal Therapeutics, Inc. and Executive Vice President and CFO of S&W Seed Company. The filing highlights his track record of leading IPOs and raising significant capital, which is often a good sign of financial acumen. Trent Davis, another director, is currently the CEO of Paulson Investment Company, LLC, a boutique investment firm. His background includes being president and CEO of Whitestone Investment Network, Inc. and serving on the boards of several other companies. This kind of investment banking experience can be very valuable for strategic decision making. Barbara Ryan, a director, brings a wealth of experience from her long career on Wall Street as a sell-side research analyst in the pharmaceutical industry. She has deep knowledge in financings, mergers and acquisitions, and financial analysis for a wide range of life sciences companies. Her background with major firms like Deutsche Bank and Bear Stearns suggests a very strong understanding of corporate finance and strategy. Rebecca Messina, a director, has a strong marketing and innovation background. She was Global Chief Marketing Officer for Uber Technologies, Inc. and Senior Vice President, Global Chief Marketing Officer for Beam Suntory, Inc. Before that, she spent 22 years at the Coca-Cola Company. Her extensive experience in marketing and brand strategy could be a significant asset for the company's growth. Now let's delve into the compensation. This table breaks down what the top executives were paid for 2025. Stephen Shum received a salary of over $278,000, with a bonus of $75,000 in option awards, totaling over $52,000, bringing his total compensation for the year to over $430,000. Terah Krigsvold, the CFO, earned a salary of $250,000 and received stock awards and other compensation adding up to over $336,000. Andrea Goren, in his role as Chief Business Officer, received a salary of over $218,000, a $20,000 bonus and option awards, for a total of over $282,000. It is important to note that these figures represent their total compensation for the fiscal year. A key piece of information here is the employment agreement for Stephen Shum. His base salary was $260,000 annually. The agreement also includes provisions for severance pay, including 12 months of base salary continuation and 6 months of continued health coverage if he is terminated without cause or resigns due to a constructive termination. This gives us insight into how the company plans to handle executive departures, which can be a sign of stability or potential future issues. For Terah Krigsvold, her employment agreement as Chief Financial Officer outlines a salary of $250,000 and a target annual bonus of up to 50% of her base salary. Importantly, her agreement also includes severance provisions which state she will continue to receive her base salary for 6 months after termination. If she is terminated without cause or if she resigns for good reason or due to a change of control. Andrea Goren's employment agreement, which was amended when he moved to Chief Business Officer, provides for a base salary of $250,000. His severance terms detail that if the company terminates his employment without cause, he is entitled to 6 months of base salary and 12 months of insurance benefits. These agreements are significant as they outline the financial consequences for the company in various termination scenarios. This section quantifies what could be paid out to these executives if certain events occur. For Stephen Shum, in the case of involuntary termination without cause or constructive termination, he could receive $310,000 in severance plus his unvested stock options. For Terah Krigsvold, termination without cause or resignation for good reason could result in payments of $125,000 in severance, plus her unvested options. Andrea Goren's potential severance payment is also $125,000, along with his unvested options. These figures are important for understanding the company's potential financial liabilities related to executive compensation. This pay versus performance table shows how executive pay lines up with company performance. For 2025, the CEO Stephen Shum's compensation actually paid was about $389,000, while his summary compensation table total was over $430,000. For the other named executive officers, their average compensation actually paid was around $174,000. What stands out immediately is the massive net loss of over $23 million for 2025. This shows a significant gap between the compensation paid to executives and the company's financial results, which is a common point of concern for investors. This table helps us understand the difference between the reported total compensation and the compensation actually paid. For Stephen Shum in 2025, the difference of about $41,000 is largely explained by adjustments to the fair value of stock and option awards. It is essentially a reconciliation to show how they arrive at the cap number used in the previous table. Similarly, this table provides the reconciliation for the other executives. In 2025, the average cap for these executives was around $174,000, compared to their reported total compensation of over $180,000 before adjustments. These adjustments are common in executive compensation reporting and usually relate to how the fair value of stock and option awards are accounted for. Here we see how the board members are compensated. For Trent Davis in 2025, his fees earned in cash were over $53,000, with stock awards and other compensation bringing his total to $100,645. Barbara Ryan received over $62,000 in cash fees, with her total compensation reaching over $109,000. Matthew Zott's total compensation was over $106,000, and Rebecca Messina's was over $95,000. It is worth noting that some directors deferred fees earned, which were later paid out in 2025. This deferral sometimes indicates confidence in the company's future prospects, as they are choosing to receive the money later. Let's look at Trent Davis in 2025. He earned $53,750 in cash fees, and an additional $46,895 in other compensation, making his total $100,645. For Barbara Ryan, the cash fees were $62,500 and other compensation was $46,895. Totaling $109,395. Matthew Zott received $60,000 in cash and $46,895 in other compensation, hitting a total of $106,895. This section discusses related party transactions. The company issued promissory notes to JAG, a company where the chief business officer is a beneficiary. These notes total $660,000 plus accrued interest as of the 31st of December 2025. They also received a warrant to purchase shares. The terms of these notes have been extended multiple times through various letter agreements. This is a crucial area because it involves a related party, raising potential conflicts of interest and important financial obligations. The company also issued warrants to purchase stock. Here we see promissory notes issued to executives. In 2022, the company issued notes totaling $220,000 to its CEO, Shum, and an entity controlled by its chief business officer. These notes accrued 10% interest as of the 31st of December 2025. The balance was $220,000 plus accrued interest. This is another related party transaction that adds to the company's debt obligations. This part addresses the independence of the board members. According to NASDAQ rules, a majority of the board must be independent. The company determined that Trent Davis, Matthew Zott, Barbara Ryan, and Rebecca Messina are independent directors. Shum is not considered independent because he is the CEO. Having independent directors is generally seen as a positive sign, indicating that key decisions are being made with a focus on shareholder interests rather than just executive interests. This section talks about the auditors. The company transitioned from MPAC CPAs PLC to Withum Smith Brown PC as its independent registered accounting firm in September 2025. For 2025, Withum billed over $229,000 for audit fees, while MK billed over $30,000 in audit fees and over $46,000 in audit-related fees for the portion of the year they served. This change in auditors can sometimes be a signal of underlying issues if the previous auditor resigned or was dismissed, but in this case it appears to be a planned transition. Here we have certifications from the Principal Executive Officer and Principal Financial Officer. These are required statements confirming that they have reviewed the report and believe the disclosures are accurate. This is a standard part of SEC filings emphasizing accountability. This exhibit references the company's clawback policy, which was adopted to comply with CC rules. This policy allows the company to recover incentive compensation from executives if an accounting restatement is required. Interestingly, the filing notes that a restatement did occur in 2025 due to several accounting errors, but the impact was deemed minimal and no compensation was required to be recovered. This is a critical detail to watch for any company. Finally, we have the signatures. This is where the CEO, Shum, officially signs off on the report, attesting to its accuracy on behalf of the company. The date of the signature, the 12th of June 2026, tells us when this amendment was officially filed. So, what is my take on all of this? INVO Fertility, Inc. is clearly in a period of significant transition as evidenced by the amendment to their annual report and the substantial net loss in 2025. The leadership team has diverse backgrounds, which is a positive, but the company's financial performance is the elephant in the room. The related party transactions with JAG and executives represent notable debt obligations and potential complexities. While the company has a clawback policy and a restatement occurred, the minimal impact on compensation suggests the errors were not tied to incentive pay. The significant gap between executive compensation and company performance, highlighted in the pay versus performance table, is a major concern. Given the recent reverse stock split mentioned in the news, I will be watching closely to see if these financial challenges can be overcome, or if they signal further difficulties ahead. The risk I am watching is the company's ability to manage its debt obligations and improve profitability in the face of significant operational losses. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.